Among institutions, I am seeing more of a recognition of fiscal dominance and concern around these ongoing fiscal deficits. And that's I have some of a biased sample because I often find out about this because they read my work. But for example, there will be major institutions that you'll know the name of, and someone will give me like an internal report, and it's like literally like it looks like something like me or Luke Roman wrote, and it's like major institution XYZ. This is like their report on the fiscal dominance problem. And I'm like, wow, okay, so that's things that were considered fringe or outside perspectives are now more normalized, right? So that's kind of the first part of this whole thing is like, is that happening among macro circles? Not all macro circles, but certainly around the margins, including at major institutions. I would say, yeah, there's an ongoing realization that these fiscal issues are not a multi-decade problem now, that they're actually starting to have material effects in the present. And that's largely because we've had 40 years of rising debt to GDP offset by 40 years of falling interest rates. And so if interest rates merely go sideways from now on, let alone up, but if they just go sideways, those deficits no longer have an offset, and that debt level no longer has an offset. And so that it becomes more spiraling, which has consequences. So that's kind of the first step. For Bitcoin specifically, I mean, there are I talked to some bank boards that invite me to talk, kind of talk to them about Bitcoin or again, some of these fiscal problems. There are institutions that, think it's rational to have an allocation. Sometimes you'll see people that are not in the ecosystem are like, oh yeah, Bitcoin's all the millennials, just kind of, they'll kind of mix up Bitcoin and crypto and just kind of put it all in one basket and say, oh, that's what the crazy kids are doing. And it's like, well, you should see the people allocating to Bitcoin venture because, these aren't kids. At least most of them aren't, and these are serious pools of capital, and so there is a increasingly, I think, aware perception. And the way that I phrased it, I was doing a fireside with Preston Pish, and I pointed out that we've all seen like the logarithmic Bitcoin chart. I forget how many peaks and troughs it's had now, but we see all those peaks. You have to remember that the vast majority of people in the world have not seen that chart. In fact, I remember the first time I saw that chart. I never looked at Bitcoin's price in logarithmic form before. I'd always, when you look at it in linear form, you see one of two things. It's either in what appears to be an insane bubble, or it appears to be a broken bubble and it's dead. It rarely looks like anything other than those two. Whereas when you look at it in logarithmic form and you go back and study, okay, what was happening during these highs and lows each time, you see this recurring cycle. And it's done this like three times, three times it's had a higher high after a 75% drawdown or more, sometimes like over 90%. And there's a handful of stocks that have done that, but I haven't found any stocks that have done it more than three times. And so if Bitcoin has another higher high, it'll be like the fourth time it's done this. But what we have to keep in mind is that, again, most people have not seen that chart. And instead, what most people see is only the ones that happened while Bitcoin was big enough for them to be aware of it. So, for example, they saw the 2017 spike and then the crash, and then they saw the 2021 spike and crash, the higher high, higher low. So they've seen two, right? And so they think, okay, there was a bubble, and then there was a stimulus bubble, and then it's dead. That's how a lot of people saw it. Whereas if those of us more in the space are saying, no, this is still going strong under the surface, when they see like a third higher high and, maybe a third lower low, and that's where it becomes impossible to ignore, because it's not just how many times Bitcoin's done it, it's how many times they've experienced it happen. And therefore it's fully on their radar whether or not they've seen that logarithmic chart or not. And so I think that's where Bitcoin becomes more and more normalized among the institutions, and becomes less crazy to talk about it because it's this asset that is just, it's not displaying characteristics of a traditional bubble. People keep calling it tulips, but if you look at the tulip chart, it's like this 3-year chart of just this insane spike and a crash. It didn't come back higher and higher multiple times over 15 plus years. And so once people see that happen more and more, it becomes normalized.
Because it's a cockroach.
Yes.
If you check your Twitter DMs, there's a chart I have permanently open as a tab. I've sent you the one I have permanently open. It is a logarithmic chart. It is a long-term logarithmic chart with a few lines that I have drawn on it. And it's the thing that just gives me most confidence in Bitcoin as an asset. It's like it's like my confidence chart. But it's basically just, it shows me that there's like this consistent, always up trend. And it doesn't matter which of the lines you look at, because there's like 4 on there. It's still consistently always up. And so it just makes me feel like this is a secure and safe asset to be holding now. Just along those lines, the reason I'm asking about, is what's this acceptance in wider circles? It is one of the most annoying, painful things about Bitcoin is the lack of legitimacy it still has. the FUD that we have to deal with, the politicians raging against it. But I always try and look at what the story will be of the next kind of cycle. And like the last cycle for me was very much macro, which is why I think you've absolutely killed it, because you're somebody who understands macro and Bitcoin. And we've seen a lot of macro people who've done very well. Luke Groman does very well. Preston Pitch does very well. All these macro people who understand Bitcoin have done very well. But my head started to go into this space where I think the next 4 years or the next cycle is really a cycle of legitimacy. It's probably my favorite thing about the ETFs. It's not the price run that will happen. It's not the institutions will be getting, because I don't really care, but it's the legitimacy that it gives Bitcoin. When you have these large financial institutions with their influence creating the ETFs and marketing Bitcoin, it's suddenly making it legitimate in front of their customers' eyes. It's making it legitimate within the industry. It's kind of probably making it more legitimate with regulators. And it feels like we may come out of this next 4-year cycle where the anti-Bitcoin stuff won't just seem stupid to us. It might start to feel stupid to everyone.
I think that's a reasonable expectation. I think it's somewhat tempered by, if you see how traditional pools of capital treat gold over decades. So multiple studies show that if you add a slice of gold to an otherwise stock bond portfolio, the risk-adjusted returns of that portfolio are better. And that's because gold tends to do well in decades where neither stocks nor bonds do particularly well. So the 1970s, the 2000s, for example, it's that non-correlated asset, or it's a differently correlated asset. And having that rebalancing slice in your portfolio was helpful, even though that was not very accepted in traditional pools of capital, even after decades, right? And so there are kind of these things that are on the periphery that the whole point is outside money, right? And so even if it's sometimes outside money that's encased in an inside wrapper, there's still kind of skepticism about it. So I think that somewhat tempers it, but I do think you're right that so this past cycle was about macro. I think the next cycle, there's kind of two things I'm kind of looking at. One is I would call it macro 2.0, which is basically kind of the meme last cycle was institutions are coming. And they never really came. I mean, around the margins they came. Hedge funds would trade Bitcoin. There's some entities that would do it, but for example, companies didn't really have the guts to follow Michael Saylor into Bitcoin corporate treasury. We didn't see any Bitcoin ETFs, and so this cycle, assuming that some of these Bitcoin ETFs get approved, and again these institutions see another higher high that kind of shakes them out of what they thought Bitcoin was. I think you could have more normalization among institutions and actually have, not just narratives about it, but actually allocations. And so I think that's one. Number two is I think for me, the more optimistic one is the rise of these little Bitcoin hubs. And so, Bitcoin Beach is an obvious early example, but there's Bitcoin Jungle, there's Bitcoin Lake, there's Bitcoin Acacia. I'm probably pronouncing that wrong. I always see it written rather than, yeah. There's, I think 2 years running the Bitcoin Indonesia conference, run by a woman named Dia. There's 2 years running the Africa Bitcoin conference with Frida and others. And they basically these little recurring hubs around the world and in some of the markets where it's most important. That I think is more powerful than even things like the Bitcoin Commons, Bitcoin Park, Real Bedford, PubKey, these pubs, these kind of locations within developed countries that are kind of these recurring, Bitcoin hubs. I expect over the next cycle, those to reach more critical mass. So this cycle was like the cycle of like those coming into existence, or at least after the initial few, there's been a spread of those. I actually did a podcast with Kathy Wood the other day, and they like track this, and they kind of have like this number of how many of these little hubs that they're noticing, and it's like a crazy number per quarter. Most of them don't reach necessarily the awareness of the ones I mentioned, but there's a lot of these. And if you fast forward 4 years, I expect these to be much bigger and more numerous. And that's in my view one of the healthiest things if that occurs. That'd be one of the healthiest types of cycles.
Yeah, I love that.
So that's I think the other half of the coin. It's institutional liquidity. Institutional capital is good because it can add liquidity to the Bitcoin network and take some of the edge off of volatility potentially, like that kind of rebalancing effect from portfolios and big pools of capital, and widen the ownership to varying degrees. That's healthy for liquidity and volatility. But I think a better thing is the actual self-custodial or community custodial hubs that are popping up. I think that's more important.
Are we going to get Bitcoin Pyramid?
I would like to see it. Egypt is not a market where there's kind of a combination where you need like countries with currency problems that also have hubs that are tech savvy have tended to gravitate towards it. So Nigeria, for example, is ranked very high in adoption. Argentina, obviously, Turkey, a bunch of Vietnam, a bunch of these countries have that blend that's really powerful.